because you can't qualify for this 300K home, but you don't qualify for 250K. But now, unless you want to pay the difference out of your pocket, that's totally up on you all. But the main thing is we need to get that pre-approval. So then once we know what you qualify for as an agent, then we go out and hit the market to kind of look for those properties for you. Once we go through that process, and let's just say you say, hey, I'm looking, I want to, look at 3 or 4 houses. Well, I'll go ahead and set that appointment of time and date, and we can meet up at those properties. Once you decide what property that you all like, basically, I'll go ahead and put an offer in on that property. Once I put the offer in, it gets sent to the listing agent, it goes to their client. Once the offer is accepted from the seller, then basically we'll come in and I'll say, hey, I'm gonna need earnest money. You have 24 hours for me to collect that earnest money. Earnest money can be anywhere, depending on what you want to put in, from $500. Some people I've seen put $1,000 in earnest money. Earnest money is just something in good faith, just basically saying that you want the property. So once we collect that, the 24 hours we collect that, then basically we'll go through the whole process. I'll go through the application, not the application, the contract with you all. So basically, I want to explain it to you, because a lot of times people go and sign stuff and they don't read. And a lot of times when I'm sending that over in an email, I'm stating read, before you sign, because I don't want somebody to read, signing something they haven't read. So once you, go through it, I will go back over the contract with you and kind of let you know what you've signed. And then once that process is done, then basically we get to the closing table, which can be anywhere depending on if you're a cash deal or if you went through a lender. Somewhere in between, sometimes it can be 3 weeks. I close sometime in 3 weeks with clients, and sometimes it's been 30 days, sometimes 45, depending on the situation. But once we get to the closing table, you will have which is called closing costs. And that's just covered like the title, insurance, and a lot of things with, dealing with the property itself, which will be kind of tied in with the lender's things. But now the closing costs can vary. So the thing is, it just depends on what closing attorney basically you choose. Because different closing costs are different. A lot of times I'll tell people, kind of giving them a rough estimate, up to $5,000. But a lot of times it may not be, but this is just an estimate. Once we close, you get your keys to your home, and then basically you're ready to go. And so now you're a homeowner. But, the thing is this, what I'm trying to get everyone to understand when they're renting, a lot of times they want to rent and say, well, hey, I want to rent a home, rent a property instead of buying a home. It's better to go ahead and actually buy a home than rent. Because if you go and you look at everything, all this money that you're putting towards rent, then basically what happens is you don't probably bought about 2 or 3 houses with paying all this rent. And rent is expensive, like especially in Hattiesburg. I mean, I think I've seen one property, it was like $1,800 a month. And that's just rent. We're not talking about they actually own this. So the thing is this, we don't want you to waste your money. We want you to be able to put this in something that is valuable to you at the end of the day, and that's being a homeowner. And that's why we have lenders here, that's why we have an insurance agent here, because these things play a part in all the things that you're going to be doing when you purchase a home. I had a client one time that actually went in, they were renting a home, and they called, it was like, well, I want to purchase a home, but I just don't really know what, how to do it, what I need to do, and what steps I need to take. And I told them, I said, well, for one, we need to get you to a lender, to see if you qualify. Then they were like, well, I'm not really sure, credit score may be bad. I just don't know if I can qualify. It was just more what ifs, they're not sure if they can do it or get it or whatnot. And it's like, you don't know what you can get until you actually do it. So the thing is, I encourage them to go ahead and apply. So basically what I do as an agent, I give you 3 lenders. You contact whichever lender you want, and you start working with that lender. Once you work with that lender kind of gets you go through all the things that I just told you about earlier. Once those things get done, then basically you come to me and we're ready to go, and that'll get you out of this rental process and get you into the homeowner process. So those are the things, that we as agents do, and my job is to find your home. I'll ask you questions like, how many bedrooms that you're looking for, how many baths that you want, square footage, your acreage on your property. Those are things that I want to ask as an agent. So basically I can know what you're dealing with. And the main thing is to get a relationship with you all. A lot of times, like I tell people, when we're out here and we're actually serving the community, helping people, buy property, we want to be able to build a relationship with you all. Basically, a lot of times I tell people it's building a relationship Because at the end of the day, once I'm able to build a relationship with you all, you're gonna send your cousin, you're gonna send your auntie, you're gonna send your mom, your brother, whoever, because at the end of the day, I've done great service to you. So that's my job as an agent, is to get you to that process, to get you to the door, we can close, and you're on your merry way. So my thing is this: do y'all have any questions for me?
Yeah. I got a sister, and she's interested in buying a home. And she wants to go to like maybe not over $500,000. So if she purchased a home from a lender and the house is $500,000, and she go out and y'all look at the property, once they do that estimate on it, and they say this house not worth 500, it's worth 400. Then who is the person that determines what she gonna pay for the house? Would it be you or definitely gonna be the lender, right?
The lender.
You're saying if it's only worth 400, and they're
Right.
selling it for 5?
Trying to sell it for 5.
Trying to sell it for 5. So basically what you do, so we don't choose, we're actually gonna go by what the appraisal value is. So if the appraisal value is 400 and they're selling it to you for 5, we can only do a loan for 400. So what you guys would do at that point, whoever your agent is, they go back to the seller's agent and negotiate on trying to bring that sell price down. If now the seller doesn't have to, it's better if they do that, because, you know, if appraisal done, that's pretty much gonna be what the value is, unless the appraiser was wrong.
Alright.
But that seller doesn't have to come down. But if they don't come down and you really want that house, you're gonna have to pay the difference.
Yes, you gotta bridge that gap, and that's the thing that we see a lot into the market, where I could say I had a client that went through the same thing. Basically, he saw a house at 450, put the offer in, got it accepted, but when the appraisal come in, the house was not at 450, the house was appraised at 350. So my client come back to me and said, hey, what should I do? And I'm like, you know, either you're gonna bridge this whole thousands and thousands of dollars of, you know, of this gap, or either if I'm gonna contact the listing agent of the property to see can they contact their client to see can they bring it back down to what the appraisal value was. But a lot of times I've seen it in the market where a lot of times the seller don't wanna come down. And there's times where they do, you know, especially if they want their property sold.
Right.
But a lot of times with this instant here with my client, they get, so basically my client wound up opting out of the contract, so I had to cut that contract. So that's the thing that, you know, we try to tell a lot of people too, it's a lot of dealing with, you know, the appraisal, what the value is on these homes. Because a lot of times they're pulling comps from, you know, certain areas, sometimes it may be 15 radius, it's just somewhere near that area, that house where it's located at. They'll pull these comps from there, and sometimes it could be right, and sometimes we just never know because we're not on appraisal.
So see, I had a situation where they were bluffing. They would bluff. They would say, "Well, you want 500,000 for it. If you can't pay the 500, no, well, we just come sell it to somebody else." And then a particular person, he done purchased another house within a month or two, and then they come back and find out that that seller actually did come down off that price to sell it for. See, that's what sometimes you never know. But I know one thing, it's like the lender and you as the realtor, it's best to really do that pre-approval, you know, before you even go into it, because you miss out on a lot of good deals if you don't do that. You know what I'm saying?
Yes.
I learned a lot from YouTube trying to buy a house, helping my daughter buy a house, because we had some nice houses, and then by the time we got ready to bid on somebody, we done put down earnest money, and you done lost out on that deal. And like I said, it's very good when you get that house pre-approved, because she done already know if you gonna qualify based on your credit score and based on how much money you bring in. You know what I'm saying? Yeah.
So yes, I mean, and that's the thing that we deal with as, you know, agents. And a lot of times, you know, I try to tell my clients, a lot of times they get stressed out. They get stressed out because this process can be difficult. You know, especially when we're going back and forth with them saying, hey, we need this. Hey, you know, you need to get your debt down. I mean, a lot of times it can be stressful, and a lot of times I tell my clients, don't stress. And I know that's easier said than done, but a lot of times I tell them, put the stress on me and let me deal with it. Let me deal with what you're dealing with, because at the end of the day, it's my job to try to find you a home, but at the same time, I'm gonna be, communicating with the lender as well. So that's why I want my clients to calm down, because when if you're stressed out, it's gonna be hard, to try to work through this process. So and that's the thing, like I said, the main thing is to get you to be a homeowner. I understand people have to rent, and I get the situation, but at the end of the day, I'm telling you, you're losing a lot of money when you're renting. It's best to become a homeowner, because now this is your property. And then if you got children, your children can now have a home. They don't have to be worried about being put out by a landlord, or being pressured, threatened, with letters and eviction letters, So at the end of the day, you can become a homeowner. So anyone else have any questions?
Well, good morning. Good morning. My name is Natasha Otis, and I'm with Trustmark Mortgage. I've been with Trustmark for 22 years, and I've been in mortgage for 14 years. So now that you know me, I want to know you. You guys are here to what? Become homeowners?
And learn the process.
And learn the process. So congratulations on today being your first day on your journey to being a homeowner. Yeah. Okay, guys, so let me tell you what I love. When I do home buyer seminars, the one thing that you guys want to take from this is how to become a homeowner. But I like for everyone to participate. Ask questions. That's the only way you're going to learn. Ask questions. So, you know my name. I need to know your name so that we all can get familiar with each other. So you'll know me and I'll know you. We're going to start with you. What's your name?
Sheena Miller.
Hi, Miss Sheena. Hi, nice to meet you.
Jason Sanders.
Hi, nice to meet you. Alicia? Tanisha, nice to meet you. Tanisha, thanks for correcting me. What's your name? Hi, nice to meet you. Jennifer, nice to meet you.
Alicia Sanders.
Nice to meet you, Miss Sanders. That's your sister, I can tell you. You have a mask on, but I can tell right here. Yeah.
Chad Watts, this is my son.
Okay, all right, well, nice to meet the both of you. And who do you have in the back?
That's my daughter.
That's your daughter. Okay, good. Good deal. All right. What's your name, baby?
Sonora.
Shanora. Okay, well, nice to meet you. Nice to meet you. Okay, so what I have, before we get started, we have a nice gift here. I have a nice tumbler and I have nice stickers. They're up here because I like the people to participate. So the more participation I get, the more gifts I hand out. Yes, yes, you're like, yes. The first thing you guys need to know when you're wanting to purchase a home is you gotta know your numbers. You gotta know your numbers. What do I mean when I say you gotta know your numbers? You have to know how much you can spend per month on a mortgage. You gotta know your numbers, because it's just like you said. Okay, it's just like you said. If you're going out there looking at a home that's worth $300,000, and I'm not kidding you, I have these customers. I want a house for $300,000. They go out there, they're looking with their agent for a home for $300,000. The agent's like, oh, okay, you don't have a recall letter? No, not yet. Oh, okay, well, let's go ahead and look at some more houses. That's no number one. So you're out there, you're looking for a house for $300,000. Then you find a house that you want, you're happy, your agent's happy, and then you're gonna look for a lender. So your lender tells you, well, you want this home for $300,000. Where do you want your payment? Oh, I want my payment at $800 per month. Oh, okay. Well, $300,000 home, you may pay $19,000, $2,000 per month. So then what? What has happened? That's not the mortgage payment you want. So you've wasted your time and you kind of wasted the agent's time. So that's why it's best to know your numbers and speak with an agent first before you start looking. I know a lot of people like to look for houses first, but no, let's know your numbers first. Know your numbers. Know how much you want to spend. Know how much your monthly debt is already versus bringing on a new mortgage. Exactly. Debt income ratio, that's number one. That's important. Also, as lenders, we can get you a lot of times approved with no down payment. No down payment, because there's a lot of programs out there for first time home buyers. That's all we're looking at. But guess what? We like to see that you have money saved up too.
Yeah.
I'm not gonna, don't, let me tell you how I am. I'm very blunt with my customers because I like my customers to know the whole process. I'm not gonna sugarcoat anything. But if you come to a bank, you wanna buy a $300,000 house, and you got, no baby, you got $2 in your.
Oh, that's not gonna work.
That may be a problem. That may be a problem. So even though there are first-time home buyer grants out there, that's good. But what lenders are gonna also look is, how much money have you saved? Are you saving money? Because you saving money, that's a plus. That's what we call a compensating factor. That is something good that you're doing so that you're able to afford a mortgage payment. So again, know your numbers, know how much of a mortgage payment you want, know how much money that you have saved up. Because you got a down payment, you have closing costs, and you have earnest money. So even though we may be able to get you approved for a loan with no down payment, you have what you call closing costs. Closing costs are fees that are associated with your loan. So it can be the bank fees, you have to close an attorney office, so you got attorney fees, and then you also have to pay your first year of insurance and maybe some property taxes. That's closing costs.
Couldn't you get that in equity, like you can get that all together, like your property taxes, your insurance, they broke into your, mortgage payment?
Yes, ma'am,
That's
you
what I'm
sure
trying to
can.
say.
You sure can. Y'all know, I like it, I like it, I like it. You're gonna get there, you definitely gonna get there. So closing costs is something that you have to pay or your seller can pay. But what you cannot do on some loans is include it in your mortgage loan. So that's why I said you gotta know your numbers, know how much money you have saved up. So again, even though we can get you funds for down payment, you still have about $5,000 or more in closing costs that you are required to pay or your seller. Knowing your numbers. Okay, so after you know your numbers, I'm ready to go speak with the lender first before I go looking at houses. You're gonna come speak to me, and we're gonna fill out an application. On the application, what we're doing, we're looking at how much debt you have. We're looking at how long you've been at your job. And we're also looking at your monthly income versus your debt. And that's called debt to ratio. Your income versus your debt. Now, if you have a lot of debt that's close to your income, that's gonna be a problem. You're a high-risk customer. We do not like for your debt to be over 50% of your income. So how do I calculate that? Let's just say you're making $5,000 per month. 10% of that is what? $2,500, okay? So $2,500, that's how much you can spend per month. That's how much we're looking at, that your monthly debts can be over. That's including your mortgage payment, and that's including the current debt that you're currently paying on your house, on your debt, okay? So sometimes we can get people approved with 55% debt ratio. That's a little high, but we like to kind of keep it at 50%. So know your debt, know how much you're spending per month versus how much you have coming in per month. That's one, okay? So after we do the application, we're gonna also look at your credit. So how many people here know their credit score? That's good. Know your credit score. I advise everyone to pull their credit every year. There's so much going on in the world, guys. If you don't know, it is easy for somebody to get your social security number and pull your credit and buy cars, houses, credit cards on your credit, and you don't know because you're not looking at your credit every year. So when we pull a credit, the things that we're gonna look for, we're gonna look at what is your credit score. You have a high credit score, you have a low credit score. We're also gonna look at collection items. We're looking at charge-offs. We're looking at bankruptcy. We're looking at your credit history. Now I know some people like, look, I've had a hard time, my credit scores are low. It's okay. It's okay. Let's look and figure out why your credit scores are low. Is it because you made some student loans?
My president said he was gonna forgive them. Wait.
You still waiting? I'm glad you touched on that.
That's all I got. Everything is all right.
That's not bad. I've seen more. I think the most I've seen in student loans is $100,000.
Oh, no, it's just $25, that's the only big one I had.
Yeah, yeah, that, you're good, you're fine. But yeah, so we're looking at your credit scores, we're looking at your credit history, we're looking at how you're paying your bills. So, you guys, if you're not paying your bills and you're wanting to come in and purchase a house, what do you think is gonna happen? If you have a low credit score, and you have a lot of late payments, we don't have any money saved up, what do you think is gonna happen?
Nothing for me. That's what Kenny had.
May not purchase a home at that moment, but what we're gonna do is, what I tell people, I hate to say the word deny. I say, we're delayed right now. Not denied, we're just delayed right now. So what we're gonna do, we're gonna look at your credit report, and then we're gonna see what's going on with your credit that's keeping your scores down. Now, credit scores is important. If you have a low credit score, it's hard to get some customers approved for down payment assistance. That's why I say, know your numbers, have your money saved up. If you have a high credit score, it's a pretty good chance that you can get down payment assistance. So know your credit score. Your job, I definitely want to touch on employment. Try not to change your job so much. Try to keep a good job history. When we're looking at employment, we're looking at how long you've been in your job. And we're looking at consistency, exactly.
Yeah.
So you don't have to be at your current job for 2 years, but we like to see that you have a 2-year work history. Exactly, stability, because you got to understand, you're coming to us, want us to loan you $200,000. So we gotta have some type of compensating factors. That's good things, when I say compensating factors. Oh, they have a low credit score. But they got money saved up, they've been at their job for more than 2 years.
Yeah.
Compensating factors. Oh, they have a high credit score, and they haven't been on their job that much, but they got money saved up. It may be okay, we got some compensating factors, okay? So those are some of the key things that we're looking at when we're determining on how, if this person's a good candidate to purchase a home. So that's the application process. Now, once we've looked at your application, we're about to leave, we're about to go move forward and purchase a home, or we're about to just be delayed for a minute, and let's just go over your credit history and see what we can do for you, okay? But if you're ready to move forward, it's like she said, you're out, we'll give you a pre-qual letter, a pre-approval letter, and you start looking for your home. Now, the most important thing that realtors like is for you, like she said, is to have a pre-approval letter. That lets the realtor know that you're serious about purchasing a home. That also lets the seller know that you're interested in purchasing a home. You guys, times are a lot different than they were 10, 20 years ago. 10, 20 years ago, you may go speak to an agent and they show you 100 properties. Nowadays, no. They want to make sure that you're serious and that you're pre-approved. Sellers do not want people to come and look at their homes without a pre-qual letter. Ma'am,
I said, let's know you're serious about
it lets them know you're serious. Put yourself in the seller's shoe. When someone comes and look at your house, you have to clean your house up, make it real nice, make it smell good, make it inviting to a buyer, and then you have to leave because you can't be there when they're there. So if you have some Joe that just want to come look at your house just because they're not really serious, would you want them in your home? No. So that's why don't get offended when an agent asks you, do you have a pre-qual letter, or they tell you that you can't come look at a house without that pre-qual letter. That just lets them know that you're serious. That just lets them know how much you can afford, so they won't have you looking at houses that is not in your bracket. Everybody wants $1 million house. I know I do. But it may not be in my price range. I gotta look at my price range, and I gotta be comfortable with a monthly payment. Anybody have any questions so far regarding the process?
the pre-approval letter, how long does it last?
The pre-approval letter, it depends on your mortgage product. I'm glad you asked that. Let me go over that. The mortgage products that we have conventional loan. Your minimum down payment is 3% if you're a first-time home buyer. If you're not a first-time home buyer, your minimum down payment is 5%. 5%, good, you have, you've been breathing. When I say 3% and 5% down payment, That's 3% of the sales price of the house. That's 5% of the sales price of the house. That's conventional. We have FHA. Let me tell you about FHA. A lot of people think that FHA is income based. It is not. It is not. I have a customer call me and say, hey, my income is low, I should qualify for FHA. No, it's not. It's not income based. I think they're thinking about agriculture or
Yeah,
something like
culture,
that.
like the
No.
housing project.
Yes, no, FHA is 3.5% now. You can make $1 million and still qualify for FHA. Okay, that's FHA. We have VA. You guys know any veterans? I believe I do veterans in here. You're a veteran, 100% financing, no down payment. 100% financing, no down payment. You can purchase a home anywhere. Then we have USDA loan. Anybody know anything about USDA? USDA means that you have to purchase a home in a rural area that's outside the city limits. 100% financing, no down payment.
That's what I'm.
That's one of
In
the
the
ones.
country.
Okay. Now, Trustmark has a loan that I love. It's called a Home Advantage Loan. For some borrowers who have credit score 640 and above, we can get them in with no down payment. If their credit score is 620, between 620 and 639, you get to put 3% down. But we also have a loan that the borrower can qualify for that will give them $6,500 towards down payment and our closing costs. So those are the different loan products that we have. But if anybody have any questions on anything so far, you know I like participation.
And what I was gonna say is also, when you know you're out there trying to purchase a home, you know you're in the process of even thinking about trying to purchase a home, don't go out and start running your credit up. You know, that's another thing I see a lot of. You know, people go, oh, I'm trying to purchase a home, and we're in the process of purchasing a home. But find out by the time that they got to the lender's like, hey, we don't ran the credit, they done been over here and bought a car, that will mess up a lot of the whole process if you start to run up your credit. Basically, what I tell my clients, do not mess with your credit during the time of us trying to get your home.
Yes. You asked about the pre-approval. What is a pre-approval? What's a
She
pre-approval?
said, how long does?
I'm sorry, how long does pre-approval last? So a pre-approval can last for 4 months. Your credit is good with us for 4 months to the mortgage product. Some mortgage products 3 months, but the majority of them are 4 months. And like she said, you guys, when we give you that pre-qual letter, that pre-approval letter, you're pre-approved based on the information that we have in front of us at that time. When we give you a pre-approval letter, we've looked at your income, we've looked at your debt, we've looked at your credit history, we've looked at how much money you have saved up, we've looked at everything when we give you Trustmark, we give you the pre-approval letter. You're approved again on what we have in front of us then. When we give you that pre-approval letter, that doesn't mean, oh, it's over, I can go out here and buy me a car, and go out and buy me some furniture. That can kill your business.
It's real quick.
Because again, you're approved based off what we have then. That does not mean you can go out and buy a car, buy some furniture, buy your children some toys, or whatever. You cannot do anything until the day that you sign your paperwork and your keys are in your hand and you have left the attorney office. Okay? Anything that you do while you're in the application process of purchasing your home, do not do anything unless you have spoken to your lender.
Yes.
It could kill your deal. And if it does, there is absolutely nothing me or anyone else can do. Absolutely nothing. So, tell me, what has kept any one of you from moving forward on filling out an application?
My credit.
Your credit. Okay.
It's not too much on there. I don't have nothing like no delinquencies and no bankruptcies and I usually just have student loan and medical.
Okay.
I own my vehicle, so that's why I want to buy a new vehicle, because I'm trying to do something.
That's right.
Trying to get one, but it's the age of it.
Okay.
I never had any repos, never even had hardships on me. So I just been scared to do it. But I mean, now it's time to do it.
Right. So what you're saying is basically, you said you don't have a lot of credit?
Yeah, that's basically what I'm saying. I don't have too much. I have a good credit score, but for as the history is only the age is 5 years.
Has someone told you that?
Nope.
So how do you know?
I don't know. That's all I'm here.
Okay, so what I'm hearing from you is, you know, I've kind of been scared, my credit scores are good, but it's my student loan.
Yeah, it's just, you know, that, just being afraid of rejection, because I don't want much. I just only want a comfortable 4-bedroom for me and them. Them two. Nothing more than 150.
Right.
You know, I do good at saving. I've been on my job since the country. I've been on there for like since 2013 on and on. I have a job and I have a career, so I hop between the two. So like right now I'm not in the medical field, but I got all my credentials. Right now I'm contracting, doing coordinating eligibility for Medicaid in Indiana,
Yeah.
working from home to accommodate.
Right.
Yeah.
How long you been doing that?
I've been with the company since 2013, but I quit in 2018 and went pursue my career for medical assistant, X-ray technician, phlebotomist, and front office specialist for 5 years since he been here. So I went back to the company, which is good standing,
When did you go back?
last year. So I'm coming up on 2 years now with him.
And how long have you been scared?
2-3 years.
Okay, so I'm gonna give you some information.
Okay.
You are what I would call an ideal client.
Okay.
You have good credit scores,
Mhm.
you don't have a lot of debt,
Mm-hmm.
you've been consistently working, you've been at your job for almost 2 years. Your student loans is what you told me before is not right.
I'm trying to do this next year.
You see my face?
Yes, ma'am. I see the
You
big
can do
thing.
it sooner. You absolutely can do it sooner.
Yeah.
Because you could own a home next month. You cannot let fear stop you.
That's what it is. Fear and rejection.
You cannot let fear stop you. You guys cannot let fear stop you because when you're coming to a lender, we want you to purchase a home. We want you to purchase a home. Every client that comes to me, I want to make sure that they're going to get a home. That is my dream, that is their dream. If you come to me and you're not ready, again, it's not denied. It's just delayed. I had customers, one lady that sticks up to me because she was just amazing. She came to me in the fall, okay? In the fall, I'm like, I'm sorry, there's nothing I can do for you right now. But this is what you can do to get your credit fixed, you know, save a little money, this and all that. I literally forgot about her. 6 months later, no kidding, y'all, she came in and said, listen, Tasha, I did everything you told me to do. I'm like, okay. I can't remember, I have so many customers. So I did everything you told me to do. I was like, okay, all right, let's go ahead and pull your credit. She had pulled the credit scores up, she had saved the money, and guess what? In less than 30 days, she purchased her new home. A year later, she purchased another home.
Wow.
So again, don't let fear stop you. Because guess what? While you could be paying your own mortgage, investing in yourself and in your children, your family, you're paying somebody else's mortgage.
Because I'm paying $11.75 for a townhouse. Faithfully,
Again.
before the field.
I need you to come talk to me. You already. You already.
Look, and no nation.
Yeah.
That's why I'm here.
Student loans, don't let student loans stop you from purchasing a home.
Even if they are in default.
Default or deferred,
Default. I got one in default.
okay? We can take it out of default. You can take it out of default.
And I'm also working with Lexington Law Firm, so they've been a big help too.
Good. You guys can talk to the student loan people and they can take it out of default for you once you just start making payments.
Yeah.
Fear, what's talking to you?
A little bit of fear,
But I'm putting it through US, so it's. Yeah. It's okay, it's okay, but I think I'm more or less scared to make that jump into buying a home, because what if I can't? That's my what if theory. And you're paying rent? Yeah. How long? Last 4 years. What's gonna be the difference in rent and your mortgage payment? That's what. Other than you're investing in yourself, this is your house. Don't be afraid. Don't be afraid. Your loan officer, look at them as your friend. Please. Well, I had, talked to a agent and he actually told me to contact you to do the process. And I was like, well, I'll do that next week. And then just got to get next week. What day? Richard? Brady. Brady. Stop putting off what you can do today. Keep putting off, it's gonna be 10 years down the road. You're like, you know what? We're doing it now. Don't be afraid. How easy is it for you guys to go out there and purchase a car?
I try not to do it, I just keep up. If they go, got dancing on lights on.
But it's easy for you guys to go and speak to a car dealer about purchasing a car. Why not the same way on a loan officer and trying to purchase a home? We're almost the same. Stop letting fear stop you from making your dreams come true. What's stopping you guys?
Rick,
Credit. Have you spoken to someone about your credit?
maybe
We're actually working on our credit together. Fear and working on our credit at the same time.
Okay. Speak with someone. That's good that you're working on it yourself, but also speak to someone. Speak to a professional. You can speak, you you said you're working with Lexington Law too? Or you guys just doing it together?
I was working with, someone out of Louisiana, but I'm just probably gonna go with Mason. I was like, my sister told me to probably go with him and see what they do.
Yeah. Yeah.
Lexington Law.
Yeah.
Yeah, I get with them.
Now I'm just gonna give you guys some tips on credit. Yes, ma'am.
You know, Latasha, you got my daughter purchased a home.
What's your daughter's name?
Alicia.
Alicia Harris.
Yeah.
And, I was kind of with her through the process, so I don't know if you remember, we was gonna do a VA route, and I was just gonna add her on. But then after you checked all her info, you found out that she was able to purchase the house on her own.
Yeah, I remember her.
So, I got people that's in here now that's saying that they're afraid to take that jump. Alicia got to break me in rent, having to pay rent, because she used my GI Bill to go to school, and she was paying like 1,000 or more in rent, and she did that for a while, so I added it up. I'm saying like, girl, you done spent over $30,000 of my money paying rent.
Yeah.
And I told her, that's enough, that's it, you done draw that land behind a house.
Yes.
Because what people don't realize, once you purchase that home, think about all the money you done lost in rent.
Yes, ma'am.
And not only that, once you purchase that home, you might wanna buy another house and rent that one out later, so you know you got
That's
a lot.
income coming in.
Yes, ma'am.
That's income coming in.
So after, I encouraged her to take the jump and purchase her own house. I mean, she's loving it. And the thing about it, now that she done got a boost in her job, she's actually thinking about coming back to you maybe later on, trying to get a bigger house. But I told her, say, you good where you at right now. But it's so easy once you buy that home, there's so many options out there for you.
Yes.
Either you can resell it, or you can rent it out and have extra income coming in, just like you said.
Yes.
So that has you all, don't be afraid to take that jump.
No. And I'm so glad you pushed her to do that, because like you said, you were trying to help her.
Right.
And didn't know she really didn't need any help. She was good. And that's what a lot of people don't understand. They're scared to move forward.
Right.
And a lot of times, like you sound fine.
Yep.
You sound fine. I don't see anything wrong. Good credit scores, love that. Like, you're a great customer. You're who we want. You're who we want. So I need you to move forward. But I'm gonna give you some quick tips on your credit. Credit cards. You can pay your credit card bill on time every month. But if that balance is close to that limit, that's killing your credit score. It's killing your credit score. Keep your credit balances 30% below of your limit, okay? Making your payments on time. Late payments will kill your credit score, okay? Collection items, if they're older, you might leave them alone, but new collection, work out a payment plan, get those paid off, don't ignore it. Don't ignore it, those things affect your credit score. Having your credit pulled too many times, that affects your credit score. I advise all of you to always pull your credit, look at it, just to see where you are. Make sure nobody's stealing your credit.
Like, say for instance, like back in the past year, if you wanna go, like, purchase for a vehicle, why do they have to pull your credit so much like that? Even if it's the car or the vehicle is not brand new, they still pull your credit, and then that brings your credit down.
Like when you go to a dealership and they pull your credit so many times.
Right.
So the reason why they're doing that, they're trying to find a lender to give you the best interest rate. So it hurts. But what you can do, you can tell them, only go through one lender. I tell them, when I go purchase a car, listen, again, and I know we're kind of off subject, when you guys want to look at, you have to know your credit score. Know your credit score before you get there, because the person you're dealing with, they don't know your credit score. So they're gonna run you through so many different agencies to see who's gonna give you the best, interest rate. That's what they're doing. But at the same time, it's hurting you because your credit's being pulled so many times by all of these different agencies.
Okay, like say you wanna go down there and check your credit somewhere, and then your credit in somewhere called in Hattiesburg, how they manage to get your credit somewhere else, even if you just apply it in one place?
Wait a minute, say that one more time.
Say like if you check your credit somewhere, your credit here in Columbia, but they end up saying, hey, you applied in Hattiesburg, how your credit end up over there? Finish like many people check it,
Uh-huh.
so how they do that?
Unfortunately, credit bureaus sometimes sell their information.
Oh.
Yeah, they sell their information. So that's why if you go to a car dealership, or even sometimes when you apply for a home, you may apply with one person, and then you have so many different people start calling you or sending you mail. The credit reporting agency sell their information.
And then I also learned by working with Lexington, once they do that, you can actually kind of, that's not me, because I didn't actually fill my information. And they can also get off your credit as well if you, because you did not sign an agreement of releasing information to the credit union that purchased, or to the debt collector that purchased it from the credit union. You didn't have anything to do with it.
Right.
So once they purchase it, that becomes their debt. And they're trying to get you to pay for it, saying because your name on insurance. Like actually sell it's not mine. So,
Yeah, that's a
Interest rate,
interest rate.
yeah, with the interest rate constantly going up.
Right, so you guys know about inflation. So inflation, we have any inflation right now, so interest rates are gonna go up. Rates are going up because they're trying to slow down the economy. So back in 2021, interest rates were down in 2%, 3%, so now they're shot up, and it's basically because of inflation. But what I tell customers, interest rates are still good, they're just kind of where they were before, COVID hit. So they're still good. So what a person should not do is like, oh, these interest rates are at 6%, I'm not gonna buy a house, I'm gonna wait until the interest rates go down. What if they don't?
so what is the interest rate, basically, what is the interest rate of purchasing a home?
So if you have a low interest rate, that's gonna keep your payment low.
Gotcha.
If you have a high interest rate, that's gonna,
So what would a 6% fall in line if you purchasing, let's say, $100,000 a year, let's say, mortgage 6%, what is that 6% going to explain? The 6% added on to your monthly? Yeah, the interest would then be added on to your monthly?
that's the interest, that's interest that you're paying
Paying
every month.
monthly. Okay, so would you pay the interest off and then just pay the principal amount?
It's all about calculation, so there's gonna be in your payment.
You mind if I answer that?
So,
Alright, so, I don't wanna cut into your time. But my name is Andrew Payton, I'm an insurance agent, but I also used to be a lender like Ms. Otis. And so one of the things that, okay,
Go ahead, I'm gonna talk about this.
okay. Young lady right here asked a good question about interest. So, how interest is calculated? She said, you said $100,000 house?
Yeah.
Okay, so
Just
you
use
take,
that example.
okay, so you take $100,000 house at 6% interest, right? Out of that $100,000, as a matter of fact, and I'm gonna just tell y'all this as a preface, preface. I mean, the reason I'm doing this is because, I've been in finance for a few years, well, quite a few years now. And the biggest conclusion that I've come to is that the average person knows absolutely nothing about money or anything finance related. Black, white, brown, it doesn't matter, everybody. They really don't know anything about money. And the thing is, you don't know what you don't know. And if you don't know what you don't know, you don't know what to ask about what you don't know, just because you don't know, anything about that field. Okay? And so, what you have to do is, you gotta start somewhere. Okay? I'm glad Ms. Otis touched on this earlier about the fear aspect, because the best things in life are on the other side of your fear. Point blank period. The best things in life are on the other side of your fear. If you have in your mind that there's a line that's sitting outside of that door, and for no reason whatsoever, you're gonna walk out that door, well, how you gonna get to your car? You going through the window? It's not gonna work out too well for you, 'cause we on the second floor. You're gonna break something on the way down, or when you get there. But if I can convince you that there's no line on the outside of that door, and then I open the door and show you there's no line on the outside of the door, what do? I killed your fear. And now you can safely take the stairs downstairs to get to your car and drive home. So understand the best things in life are on the other side of your fear. You gotta start somewhere. You gotta start walking. Again, with the same example. If you believe in that line is on the outside of the door, and so you always stay in your seat, you'll never get anywhere. You'll be in this library for the rest of your life. Again, if you got a family, what they gonna do? Where's mom? Where's daddy? Where's brother, sister? Oh, it's in the library. Why they still there? They're scared. Fear will paralyze you, as everybody in here has seen. So let's take $100,000 house. And what I have right here is a loan calculator. So you take $100,000 house at 6% interest. Most mortgages are gonna be 15 or 30 years, okay? Now, 30 years is 360 months. Just quick little math lesson. And so, if you take a $100,000 house at 6% interest, and I'll tell y'all how interest is calculated, but for 30 months, that's gonna be a monthly payment of $599.55. Now, understand where interest comes into play at. And I'm just saying, I'm gonna go to the end and then come back to where I was a second ago. The total that you would pay for that house, if you, just a $100,000 house, 6% interest over 30 years, you would pay for that house in full, $215,000, $838.00.
Say that again. If you,
For a $100,000 house at 6% interest over the course of 30 years, total, you would pay $215,838. So you paid for that house twice.
yeah.
This is why interest is so important. Now, we are, like Ms. Otis said, we are in a time of inflation, so interest rates currently are up. Now, just to let you know how much interest plays a factor, we're gonna take it from 6% interest to 8% interest. Well, actually, what's the average rate right now?
6%.
6, okay. So let's say your credit is just not as good, okay? And so let's say what, 8% interest? That too high?
Yes.
Okay. What's
Highest,
the-
I would say around 7.
7, okay. 7% interest. Your monthly payment will be $665.30, and the total payment will be $239,508. Again, you're still paying for the house twice. But just 1% in interest has caused you to pay almost $20,000 more in the same course of time. So, credit is a number representation of how well you pay people back. So when lenders look at your credit score and they see you have a lot of delinquencies, they see you have a lot of late payments, they see you got collections, whatever, anything negative on your credit score, that's what will lower your credit score. And that says to them, you don't pay your bills back well. So we're gonna charge you more because you're more of a risk to us. If you come up to me asking for $100,000 and realistically, a decent house, you can be looking at 200 easily. What you said, 4-bedroom, 4-bedroom, 2-bath, 2-3-bath? You're gonna be looking at, if not more, close to $200,000. And that's just the economy we're in right now. So, just to give you a realistic number, $200,000 house at 6% interest over 30 years will be $1,199 for a monthly payment, but the total payment would be $431,676. Again, you're still paying for the house twice. Now, how can you avoid that?
That's not just okay.
Now, okay, so you have to know how interest is calculated. Okay? Know this. I just need can I use this pen? Okay. And some I don't want to use that.
She has a sheet of paper.
That's perfect. Oh, this is perfect right here. I'm kind of, and I know I said I'm an insurance agent, but I feel like everybody needs to know this. And I'm gonna go around the room and show this too. Now, what I've done, don't get on my drawing, y'all. But I want everybody to see this. This is just a graph, right? And I'm gonna go around the room and show this so everybody can see it. Now, this is just a graph, okay? Now, let's see, I know I'm not. It's just throwing anything else to the paper. But okay, so there's principal and interest. All right, we talked about interest. That's just the rate that you pay. That's the cost of borrowing money. That's what interest is, the cost of borrowing money. Okay? Now, the interest you pay every month changes. The interest that you pay every month changes. Why? Because it's based off of your balance. So if you start with a $100,000 balance, just as an example, you start with a $100,000 balance on this house, and the interest is 6%. Okay. The interest is 6%. Now this interest, and forgive me if let me put a pause for a second. If at any time anybody has any questions, raise your hand, ask me, I'll be glad to answer. Okay? Feel free to interrupt, because I want y'all to understand this. Okay? Factored into your monthly payment is principal and interest. Okay? Principal is the amount of money in your monthly payment that goes toward that balance. Interest is the amount of money in your monthly payment that goes toward the bank. Because remember, interest is the cost of borrowing money, right? Okay, now, I'm trying to keep it simple, but I want y'all to understand this at the same time. Let's just say your monthly payment is, let's go back to the example, just to keep it simple. All right, so let's say your monthly payment is $1,199. As a very simple example, $1,199 times 0.06. That would be, and I know it's not right. If I had more time to go in depth, I would do it right, but just, because I know you know. But let's just say $71.94. So out of that $1,100 roughly, or $1,200, let's just say, $71.91 will go to the bank. And the rest of that money will go towards the principal. Okay? Or go towards the balance. Does everybody follow me? If you're not following me, please raise your hand. Cause I can just sit up here and talk to y'all for 3 hours, but if you don't understand what I'm saying, it's all for nothing. Okay? So, part of that money goes to the bank, and part of that money goes to your balance. So, the part of the money that goes to your balance, the next month, you will still have the same monthly payment, but all of the money that the principal in your monthly payment, the money that went towards the balance, that will subtract from your balance, and then now you have a new principal and interest payment. Okay?
Is that each month?
Yeah, now, you keep the same monthly payment every month, but the money split between what goes to your balance and what goes to the bank changes every month, because it's based off your balance. That's where your interest payment comes in. That's why it's a percentage. Okay? That interest is a percentage of the balance. Okay? So when your balance changes, the percentage doesn't change, but the number, the amount of interest changes. Does that make sense, everybody? Okay? So that's why interest rates are so important. Now, one thing you do want to do, you do want to work with people like Miss Otis here. But it's important to shop around. Okay? Trustmark has one interest rate for their various credit scores. What's the other?
No. First.
A credit union and a bank, they have similar functions, but they are different. And without going to the laundry list of details, just know at on a very basic level, they have similar functions, but they are different. A lot of them have similar products. You can get a mortgage or a car loan through a credit union, but just know that they are different. And one thing if you're serious about looking into a credit union, just go on Google one day and type in differences between credit unions and banks. Education is key. Okay? Reading is fundamental. And it's not so much school education, it's life education.
And that's what school don't teach, is life education.
That is
It
very
should
true.
be taught in the 12th grade.
It should be. And that's really a whole conversation
But
on
you're
its own, and I couldn't get into that, but we're gonna stay on topic. Yes, ma'am.
See, I'm trying to see, you're not really losing, because at the end of the day, just like you said, you got the principal, that's the actual money that you're paying for that house. That interest you gotta pay back to the bank. But isn't it true that, take for instance, after 20 or 30 years, if I wanted to sell that house, even before then, wouldn't that be the equity that I'm getting back?
Right.
Yes, so, I'm glad you mentioned that. Equity is I'm gonna say this and then explain it. Equity is the amount of ownership you have in a property. Okay? So, let's say a house is worth, the appraised value is worth $300,000. And after 20 years, you paid off $200,000, so there's $100,000 left, right? The amount of, if the appraised value is $300,000 and you still owe $100,000, then your equity is $200,000. Okay? Now, when you get ready to sell that house, if you sell it for that $300,000, you first got to pay the remainder of that loan off, which would be $100,000, and that equity, or the rest of the sale, the $200,000, will go to you. Okay? That makes sense, everybody.
Yeah, that's a win-win, because you really get your money back, but you're not gonna get it. You know what I'm
Right.
saying?
Now, this is one of the reasons that home ownership is a good thing. Okay? If, let's say you buy a house for $300,000, 20 years passes. Let's say you bought a house in 2003, which is 20 years ago, for $300,000, and you paid $200,000. Well, more than likely, that house has gone up in value over that 20-year period. Okay? Which means the house has appreciated. The house has gone up in value. Now, cars, on the flip side, they typically depreciate. And why is that? Because cars get older. Cars get older with use and time.
And the older a house is, the better it is, basically, right?
Right.
In the city.
Because you building a house and houses stand the test of time. Okay? Now, a house can get to a point, you don't take care of it,
Yeah.
you get all broken down and, I don't have to go there, y'all know. But that house would appreciate in value. So let's just say that house was worth $300,000 when you bought it 20 years ago. Just for numbers' sake, let's say it's gone up to $400,000 now. Now you still only owe $100,000 on that house. So when you get ready to sell it, now you have what, $300,000 in your pocket. So that's one of the reasons that home ownership is a good thing.
So quick question, so if you, just what you said, if you purchase a house for that amount, $3,000, and let's say you add on a garage to it or add an extra room to it, you put in $2,000, that brings the equity up, right?
Yes and no.
Yes,
And let me explain why yes and no. All right. You got a group of friends, right? Let's say you got 5 friends that are all nurses.
Mhm.
All of y'all are doing good in life. Over time, 5 of those 5 friends, they all become millionaires. And let's say when y'all started, y'all were just making what, $50,000 a year?
Mhm.
Let's just say that. Now you got 5 millionaire friends and you was making 50. Do you think you was hanging around those same friends that you would continue to make 50? Or do you think eventually you would start
I need to
making?
give them some nurse practitioners.
Now, I say that to say this. Going back to the houses. The neighborhoods you're around,
Right.
that's typically where your house will sell. Ms. Otis mentioned earlier that when you go to appraise a house, they find comps.
Mhm.
They find comparable sales.
Mhm.
That's what comps is y'all get what I'm trying to say. They find comparable sales, okay? What that means is, if your house is sitting right here in the neighborhood, they gonna find another house that is sold within the last year, ideally, the last 6 months to a year, and say, okay, this house sold for $100,000, this house sold for $120,000, this house over here sold for $110,000. It doesn't matter how great this house is, it's not gonna sell for much more than the houses that sold around it. You can make all the improvements you want to, but typically, now there are exceptions to every rule, yes. But typically, you're gonna stay around that same price range, okay? So you can make $1 million upgrades to your house, and you can think, oh, I put $600,000 into this house after I bought it. But again, this house sold for $110,000, $115,000, $120,000. You're not getting $1 million out of this house,
Mhm.
okay? So just know that too.
So it kind of works both ways. If the person trying to sell it, you just say, I'm not buying the house for that price. Choose the houses around you.
There you go. Now, you can try to sell a house for whatever you want.
Yeah,
The question is, will it sell for that price? And that's a whole different topic.
That would be her problem, won't it? But she said let her work, I don't know. She said
Yeah, and that's one of the reasons why it's a good thing to have an agent. Because the agent is like a buffer between you,
Right.
between the seller and the buyer. Okay? So just know that. Let the agent do their job.
Yes.
Okay? The agent's job is to go to the negotiating table and say, okay, house is worth this, they're trying to sell it for this. Realistically, and this is talking between agents, what can we really get this house for? We know it's not worth this, so why are they trying to sell it for this? And a lot of times you have those situations to where they put $500,000 into the house, but the house is only worth $250,000. Or after they did the upgrades, it only goes up $50,000 in value. Or say, I put 200 into it, why is it only gone up in value 50? Well, again, the neighborhood, the people you're around. And that's true in life too. You never usually get hired in your friends. That's why it's good to have good people around. Okay? That was my life lesson for today. But but is everybody following me? Is there anything I said to where y'all don't understand? Y'all got questions on any of that? All right. So now let's get to the insurance part of this. Now, insurance can be one of the biggest scams known to man.
Yeah.
And that's coming from an insurance agent. Okay? Insurance can be one of the biggest scams known to man. So the question is, why do you have to have it? Well, you want to buy a $200,000 house. If Hurricane Katrina happened again and that house was flattened, you had $200,000 to rebuild it, in comes insurance.
I'm gonna bet down the video for insurance, I'm gonna be my truth.
In comes insurance.
Yeah.
Okay? Insurance is, by definition, is the transference of risk, okay? Everybody has risk. It doesn't matter who you are. Everybody has risk. When you go to a lender and you say, I wanna borrow $200,000 house, I wanna borrow $200,000 to buy this house. Okay, now they're saying, you have X amount of risk to me. And just as a side note, just because I know, and from my experience that people don't really know this, relationships are important. Everybody say that with me, relationships are important. The same way you never typically get higher than your friends, the importance of those relationships is just as important as a relationship you have with a financial institution, okay? If I come up to you, I never met you before in my life, if I come up to you and say, I wanna borrow $200,000, I got 700 credit score, and I always pay my bill on time, what would you tell me? Exactly.
I don't
Exactly.
know, you might not be, how's your income ratio?
There you go. If I come up to you asking you for hundreds of thousands of dollars, you're gonna start asking me questions.
Right?
Why should I give this to you?
Why do you need it?
Why do you need it? Why,
Why do you choose?
how well do you think I could, I'm not gonna say that. What's the chances of me getting my money back? And since I'm taking on this risk, I'm gonna charge you some more in the form of interest. Remember, interest is the cost of borrowing money. If I give you 200,000, you're not gonna give me 200,000 back. You're gonna give me my 200,000 plus some more. That's how banks make money, okay? So just understand the thought process in it. That's why you have interest. If I borrowed $200,000 from you and I just gave you 200,000 back, you even. You didn't gain anything. So I bet I got $200,000 from you for free. How many of y'all want to work for free? I didn't see no hands going.
It's the only job I have for free.
Now, back to the insurance. So, insurance is the transference of risk. If something happens to your property, typically most people, the average American, does not have the money to pay for it. And that's where insurance comes in. That's what you pay for. Now, the reason it's required is because somebody else paid for your house, and now they have a financial obligation to that property. And if something happens to that property, let's say, again, the Hurricane Katrina example, you got $200,000 house, Hurricane Katrina happens again, and that house is flat, that property ain't worth $200,000. Because now you just got a bunch of bricks and wood. That ain't worth $200,000. Okay? So now what happens is the insurance that you're paying for, that money comes into play and rebuilds that house. Why? Because you still got a loan to pay off. Okay? Does that make sense to everybody? Okay? So when you go to look for a house and your budget, your affordability is, or you get pre-qualified for $200,000, don't go look for a $200,000 house. Why? Taxes and insurance. Okay? Property taxes and insurance. Does everybody know what the word escrow means? If you don't, say something.
Escrow, I do know, I'm getting escrow and equity kind of.
Okay, so equity is
I know,
your ownership of the property.
right.
Escrow is, think about this, think about it like this. Escrow is the money set off to the side that, no, it doesn't grow, but escrow is almost like a savings account. It doesn't grow in value or anything, but the money that is in your, I'm trying to think of the real simple way to say it. Escrow is like a separate account that a portion of your monthly payment goes into to pay for your taxes and insurance. Okay? Now let's say, take that $100,000 house. Let's say your insurance premium is $1,000 for the year. Broken up, that's, well, make it easy.
Yeah.
Say your insurance is $1,200. Okay, so that means your insurance will be $100 a month. So that means on top of your principal and interest, that's the number that the bank would give you for your monthly payment. There would be an extra $100 added to your monthly payment
That's what I was
to
talking
go
about.
into your escrow account. Okay? And then whatever your taxes, whatever the property taxes are, let's just say it's another $1,200 for the year, that's another $100
That goes for.
that would have to go into that escrow account to pay your property taxes. Now, I'm not gonna get into the property taxes, but pay your property taxes, or you can't lose your property. Just know that. All right, we can get into the reason later, but just pay your property taxes, okay? Now, so that's the reason I said, if you get approved for a $200,000 house, don't go look for a $200,000 house. Why? Because when they factor in your monthly payment, and some mortgage companies will do this, I trust that Trustmark does, they're the best out there, hands down. Some mortgage companies will not factor in your escrow, your taxes and insurance into your qualification. So you get qualified for $200,000, and you go find a $200,000 house, well, you can afford just that payment. But then when your taxes and insurance are factored into the monthly payment, then they say, wait a minute, this is extra $200, I can't afford this now. Then you're gonna be on the verge of losing that house. But why? It's because you didn't factor in that taxes and insurance.
So let's say 150 to get 2,000.
You can say that. Really anything under which you qualify for.
Right.
And don't just go look for a rundown house, unless you plan on fixing it up or whatever. But again, don't try to max out what you qualify for. Everybody's heard the phrase "live below your means."
Yeah.
If you wanna,
Be comfortable, live below your.
yes, that's true. But everybody in here wants to be great in life, right? If you don't want to be great in life, raise your hand. I didn't see no hands go up. All right? So listen, if you want to be great at something, look at the people who are already doing what you're trying to do and do what they do. I'm using sports analogy because I got some men in here, no offense to the ladies. I know women watch sports too. But I feel like y'all understand this. There are people in the Sports Hall of Fame, basketball, football, baseball, whatever. There are people in the Sports Hall of Fame that a lot of people would argue shouldn't be in there. But they got into the Hall of Fame because they were really good, not great, but they were really good for a long period of time. And that's really all you have to do in life. You just have to be really good for a long period of time.
Yeah.
You make smart decisions for a long period of time. You don't have to go out there and be Elon Musk and Jeff Bezos and all the people. You just got to be really good for a long period of time.
It takes 90% attitude and 2% motivation. You be the dumbest person in the world.
Okay, we still roll with it. But, they say in sports a lot of times, 90% of the game is mental, 10% of the game is physical. What does that mean? It comes down to mindset. How you think and how you act based off what you think. Okay? How you think and how you act based off what you think. I said earlier, you don't know what you don't know, but you gotta start somewhere. Okay? When it comes to insurance, shop around. Now, a person like myself, I'm what they call an insurance broker, which means I have contracts with a lot of different carriers, and I can shop around for you within the network of the carriers I have a contract with, and can see who's offering you what for your situation. Okay? Now, if you go to somebody like a State Farm, they can only offer you State Farm's quote. Now, I'm not saying don't go to them to get a quote, because State Farm, they still a decent company. All right, I just feel like I'm better. But at the same time, you still want to shop around. Just know who's offering what. Okay? Now, when it comes to the lending, I would say start with Miss Otis. And no one know I am. No, but when it comes to anything, it's okay to get a second opinion for something, okay? It's okay to get a second opinion. Even with Miss Hannah right here, you find somebody you like. Now I feel like this is the best realtor in the world, okay? And I just met her an hour ago, but she's still the best in the world. But still, y'all get what I'm trying to say. It's okay to shop around, but just find somebody you like, find somebody that's gonna do the best job for you. Okay? Find somebody that's gonna educate you on what's going on, keep you in the loop, and works for you. And again, at the end of the day, allow them to do their job. All right? Anybody got a question? All right, well, I'm done.
I appreciate that. Well, I'm glad everyone came out today, to actually, but yeah, I'm glad everyone came out today and to be part of what we have going on. Like I said, it's basically educate you all, cause like I said, once again, it's very important. You've got to have this education to know what you are doing. Because a lot of times people don't know, and if they don't know, they can't act on something they don't know. So it's important to be able to come to like things like this, first time home buyer seminars and things like that, which this will not be my last seminar at all. So my whole goal is to try to at least maybe every other month or quarterly host these events, because I think the word needs to get out there more, because we have a lot of people just don't know. I mean, and then they're calling lenders, they're calling insurance agents, they just don't know. And then the first thing we mention, they're like, well, what is that? I don't know what this means. And that's because they're not being educated. So that's the reason why I want to, continue to host this event, is so that we can continue to keep, educating everyone. So I'm glad everyone came out. I appreciate it. We all appreciate it. And that's pretty cool. All right.